Okay, good morning everyone. Thank you all for joining us. I wanted to just give you a quick rundown that was in the media advisory on what's happened since the last time we talked. Our first quarter pension returns have come out. We've had a couple of healthcare cost-cutting measures by asking Blue Cross to cut their costs by 15% and also negotiating lower Medicare Advantage rates for retirees. And of course, one of the topics that's timely today, and I know Dan, you want to get into this right off the top, is the Treasurer's call for a public vote on new debt, including the build-and-see transportation bonds. So I will go ahead and turn it over to Treasurer Folwell and we'll get to your questions.
Thank you, Stephanie, and thank all you for joining us. We're also joined today by some of our summer interns who are here working in different departments of our Treasurer's office, and we appreciate their presence here not only today but this summer. Thank all the staff for putting this together. The purpose of having internships is to introduce people into the value and the virtue of public service, and we always need good, smart people working for state and all levels of government, and so we appreciate everybody being here. Just briefly to add on to what Stephanie said, we're very excited about our recent announcement on our negotiation of our Medicare Advantage. It's the purest example in my tenure as treasurer of taking advantage of our largeness. What we did is we were able to negotiate an incredibly low rate for our Medicare Advantage retirees. This rate, this program had features like no deductible, no copay. I think it had the pharmacy benefit because of Medicare Part D, and it was what we call fully capitated, which means we have no cost beyond the premium that this state is paying. And we're super excited about that for the basic reason of by taking advantage of our largeness for our older participants in the plan, that we are going to be able for the second year not only freeze family premiums for state employees for 2019, but we're going through the analysis now of actually lowering premiums. So when everyone else in the universe's insurance rates are going up, especially for family premiums, we are going to be freezing them for next year and possibly even lowering them. And we're able to do that financially without dipping into reserves because of the contract that we just announced. So we can talk about pensions, health care, local government commission, build-in-see, or any other topic that's on your mind. That's why we call this Ask Me Anything. And turn it back over to Stephanie.
Okay, did someone else just join us?
Yeah, this is Dave down in Charlotte.
Okay, great. Thanks for being on the call. I'm going to go ahead and, Dan, get your questions in first because I know you've got an 11 o'clock you need to get to.
Yeah, Treasurer Folwell, you've been pretty outspoken about your concerns on the Build-in-See Act and the Bond Act, and yet today there's committees in both the House and the Senate that are taking that up, and it seems like it's being pushed pretty quickly. So I'm just wondering, what your reaction is to your advice not being followed, and what impact that might have. I know this won't be using the full faith and credit of the state, but will there be any kinds of impacts on the bond rating if they go this route?
Well, I'll do what I've always tried to do on this call and not answer this question emotionally or politically, but answer it mathematically. The build-in-see proposal that's currently on the table, if my calculations are correct, has the potential of increasing the state's debt by over 50% and without the approval of the voters. So the criteria that I put out on the build-in-see is that I've always been in favor of voter-approved debt. And sometimes that's what happens when people put one thing on their job application as to run for office, and then when they get the job they actually do things differently. I've always been in favor of voter-approved debt when I was a legislator or when I was on the school board, and I'm even more in favor of it now as state treasurer. The other two criteria, as you've already reported on, are basically that the amount of debt that we take on cannot violate the debt affordability study. This debt affordability study may not be unique in the country, but it's something that rating agencies look to when they determine whether North Carolina is able to maintain its coveted AAA bond rating. The reason I'm telling you all that is that we're getting ready to go to the rating agencies this summer to reaffirm our AAA bond rating, because we're just now issuing $400 million of the Connect NC bonds. You know, the Connect NC bonds were voted on by the voters 2 years ago, but only 10% of those bonds have been let out. So how does all that relate to your question, Dan? And how it all relates is the fact that we are going to the rating agencies to reaffirm our bond rating. We think that the debt affordability study is very important to the rating agencies because it gives them a look-see into the recipe and the sidelines and the boundaries and the processes that we used when we determine whether we're going to take on debt in this state, no matter what the debt is for. It could be for parks, community colleges, roads, justice and public safety, universities, public schools. It doesn't really matter what the debt is used for. So that's very important. And obviously the third criteria of that was that any appropriation of this money needs to go through the normal appropriation process. There shouldn't be a fund set up that people can just access to build road projects that go outside of the process. I applaud what the General Assembly did 3 years ago. They actually put a permanent fix on the issue of how we're going to fund public road construction and reconstruction in this state 3 years ago, when they made a decision to stop rating the Highway Trust Fund and making sure that the money that the citizens of this state were paying, generally through gasoline taxes, was actually going toward the purpose it was intended. So we'll see how this all shakes out in the committee. I've set forth the criteria that I'm looking to, but more importantly, it's the criteria that the people who hired me to be the state treasurer are expecting me to utilize while I am the state treasurer.
When would such a debt affordability study be done? Shouldn't that be done before they go passing a bond?
The debt affordability study is due every February 1st of every year, and I was just a few weeks after being sworn in 2017. I presented the first debt affordability study of my administration, and actually that was the first debt affordability study in the history of North Carolina that actually included the unfunded pension and health care liabilities. So I did that in February of 2017, and we presented another debt affordability study, which is available on our website on February 1st of 2018. And when I present that affordability study, I send it to the governor, the President Pro Tem, the Speaker of the House, and every member of the legislature, and it's available on our website.
So does that study show that there is capacity to take on a $3 billion transportation bond?
It's close. I don't have the numbers off the top of my head. I think it's $268 million a year, possibly. We can get that study to you after we go offline, Dan. But
right.
But it all depends on how you do it. How you issue the bonds. And the reason I keep bringing Connect NC into this conversation is that is a pure, live, living, breathing example of when voters approve things, but the process isn't ready for them. Only 10% of those projects were even close to being shovel ready to the point we could even issue debt. Now we're into another 40% of the Connect NC bonds. Into another 20%. So we did 10% of it, and now we're only going to do another 20% of it. So my point of saying that is that if the money keeps rolling from the Highway Trust Fund every year into the amount of money that the Department of Transportation has to use, by the DOT's own modeling, it could be a few years before they would even have to issue any debt. And that's why I've said if it's that far off to where they would need to issue debt, that far away from where the day from today, then why not just put it to the voters in an election year where there's going to be a high voter turnout?
Okay.
Dan, I can send you that study after the call.
All right, that'd be great. Just one other quick question. You mentioned last week about the $50 billion in unfunded liabilities. So if they go through with things like this bond, this transportation bond, how does that impact your desire to reduce those big unfunded liabilities in the pension plan and the state health plan?
My desire or my ability?
Well, both, I guess.
See, I have the desire to lose 20 pounds, but I'm not sure if I have the ability to do that. So the desire is, I don't think anybody's ever questioned my passion for trying to solve these issues. I am more convinced than any time that I've known you, Dan, or anybody else on this phone call. I'm more convinced that the issues of unfunded health care and pension liabilities, as pointed out by Bill Gates 7 years ago and Warren Buffett, are the single biggest threat to everything that we consider to be a core function of our governmental entities, whether it's public construction, justice, public safety, the ports, the parks, the zoos, or roads. I'm more convinced of that than ever. I'm also optimistic that North Carolina may be one of the few states that actually can pull itself out of this situation. But we cannot pull ourselves out of this situation if we don't start funding it. The pension plan, even after we reduced the assumed rate of return a few weeks ago, the pension plan is right at 90% funded, one of the 5 best funded pension plans in the United States. According to Pew Research, as David Middleburg pointed out in their piece a few months ago in Business NC, we have a $35 billion hole in the state health plan. And the reason that I bring this up is that the money to fund the pension and the health care liabilities, that money has to come from somewhere. And that's why this is such an important issue. And I think resolving the unfunded pension and health care liabilities are going to make the generational difference in North Carolina's financial future. I also think it's going to make the generational difference in our ability to recruit and retain businesses and create an environment in North Carolina for businesses to expand. Someday, maybe sooner than any of us think, corporate relocators, people who do site selections, one day they're going to be asking the question, in addition to everything else they ask about when they decide to bring a big headquarters or a plant to a particular state, they're going to start asking about the unfunded pension and health care liabilities. Because as corporate citizens, after you get past the engagement party and the marriage and you open up all the wedding presents and do all that, as corporate citizens, they're going to be there a long period of time. And if they're locating in a state that has huge unfunded pension and health care liabilities, ultimately, one day, somehow, some way, they're going to be asked to pay for those unfunded liabilities. And I'm trying to do everything I can to make sure North Carolina's not one of those. The pension plan is 90% funded. The state health plan is 2.5% funded. So we have a lot of work to do.
All right, well, thank you. I'm sorry to take up so much time.
Thank you, Dan. Who's got a question next?
I do.
Thanks, Rio. Go ahead.
Yeah, thank you. Good morning, Treasurer. I hope you've been well. I actually wanted to ask about, your investment returns for the quarter. I see that you had said that there have been very little investment gains. And I was wondering whether this would make you rethink your decision to reduce exposure in public equity and in alternatives?
No, my decision to do what we did last year was based on, as I've said repeatedly, the fact that there was almost $11 billion worth of uncalled capital, otherwise known as blank checks, on our pension plan. That we, in the fiscal year ended in 2016, the pension plan paid out not hundreds of millions, but billions of dollars more in payments to beneficiaries, participants, than it actually earned. And now, as we are sitting in 2018, we have paid out $2,590 million worth of benefits this year. Almost $2.6 billion in benefits this year, probably close to $250 million worth of Wall Street fees, and our earnings have been nearly flat. So the issues, I mean, we're having to make decisions about where to pull money in order to pay benefits every month, and fortunately we have the juice, so to speak, to do that. And so it's like Teddy Roosevelt once said, you do with what you know, with where you are, with what you have, and that's exactly what we did last year, and we're proceeding as we go through this year.
Right, but what plans do you have for the future to kind of make up for such few gains, and to see that you don't have this constant approach where you have that juice, but you're constantly looking for funds to pay your to pay the retirees?
Well, number one is that there is a very low probability, even though we just reduced the assumed rate of return, which we've gotten credit for in the national and international press. There's a very low probability that we're even going to hit those investment returns over the next 20 years. So we can do some big things or we can do some little things. Our asset allocation model has not changed. We've made a allocation to buy into some secondaries in the alternative investment space, which we're very excited about. As of yesterday, we crossed $10 billion in our in-house index product. This time last year it was a zero. So we're approaching somewhere between 40 and 50% of our investments being managed in-house. And we're continually having managers come to us with ideas of how we can earn investment returns, but understanding that we are conscious about the fees that we pay. And I've said this before and I'll say it again. As the fiduciary of this plan, I have a loyalty and duty of care. And we all know what those terms mean, but duty of care means that we're constantly looking at the value that any one of these particular investments brings to our participants.
Okay, got it. And last question, why
can I add one more thing?
Yeah, sure.
The stock market doesn't care that I'm paying out $515 million every 30 days or that I have that need. The stock market doesn't care about that. They don't care. The bond market doesn't care what my needs are. The real estate market doesn't care what my needs are. The stock market doesn't care what my needs are. The markets are the markets. And, returns come and go, but fees are forever. And so I think that we're on the right path and we're adopting the right strategies, and I apologize for interrupting you.
Oh, okay, no problem. Yeah, my last question was, you had said that you're pushing more into secondaries in the alternative space, and I also see that recently you've made a couple of fund-of-fund commitments within private equity. So what's the kind of upside that you see in that? What's the opportunity that you see in that space?
Number one is we have a very aggressive fee structure in that space that I'm very excited about, number one. Number two, we have a tranche within that structure that creates a platform so that if another treasurer or somebody were to call us with an investment that we're already familiar with, we have a way of purchasing it and putting it on this platform without creating a whole nother foundation, so to speak. And number three, in most of these secondaries that we're doing, we know exactly what we're buying. We're not giving $500 million to a money manager on the basis that they're going to do something over the next 4 or 5 years. The money that we're giving them is actually already invested in things that we can analyze. And it's a reminder to tell the people on this call that something that I've had to get my head around. I've always known this, but committing capital and investing capital are two different things when you're managing the state pension plan. And when we commit money to the in-house index, passive index, when we commit money to passive index, it gets invested right then. When we commit money to some of these secondaries, it's already invested right then. So it has some very common characteristics and a very favorable fee structure for our participants and for our taxpayers.
Okay, great. Thank you.
Thanks, Ria. Dave, did you have any questions for us?
Yeah, I was going to go back to Dan's point about the Bond Act. Have you sat down with Representative Torbett and Senator Rabin to talk about this?
I have months ago. It was all conceptual, as well as the Secretary of Transportation. We were not shown. We did not get a look-see into actually what the bill says, which I have on my desk here as I'm speaking to you, David, until probably a few weeks ago. So the details of this are something that we never had any exposure to. It's just the concept. And as I said in my press release, I'm not against increased funding for transportation, or I'm not against those that are supporting that. But there's another problem that they constantly talk about, which is a different issue, and that is with vehicle miles traveled and with electric cars. And there's going to be a long-term generational discussion about what cars look like, what cars will look like, what will be the size of parking lots, what autonomous cars, electric cars, and how all that gets funded through this traditional model of the gas tax. That's a serious discussion that will need to take place, and can't take place in a short session.
Well, do you? I don't mean to get political here, but the Republican Party that's arguing that you should issue $3 billion of debt without voter approval. How is that? You've been a lifelong Republican. How is that consistent with goals of transparency?
It's not consistent with anything I've ever said or anything I've ever communicated in my public service life.
Well, because I assume that what's happening here is that the people who issue the bonds, the bond market is saying, well, let's get this stuff done before the interest rates go up. So, and everybody, like you said, we all love transportation, mm-hmm. right? So, is that the rush here?
I think that's a good that's good intuition, but that's not the reality, and we've seen that with the Connect NC bonds. There was such a rush with the Connect NC bonds, and as we're sitting here on this call this morning, only 10% of those bonds have been issued, and I can't imagine that transportation is any less complicated than building a dormitory or improving Hanging Rock State Park or any of the other monies that was to be used for. I think transportation, especially the environmental side of that, has a longer tail, so to speak, and is more complex. So to get back to your point, there is any time that we issue a bond, from the time we go to the Harris Teeter and buy the ingredients to when we get it in the oven, it's normally about a 4-month process. You got bond counsel, you got legal counsel, you've got all kinds of things that have to come together in order to issue a bond. So that taking advantage of lower interest rates is a zero consideration here. And but the model that the Department of Transportation has shows that because of the hundreds of millions of dollars that's inflowing into them every year that was currently being rated out of the Highway Trust Fund, their models show that they won't need money for several years. So as I say, I'm sticking to what I said, and that is that I think when you increase the debt on the citizens by over 50%, that it should be voter approved, it should be within the limits of the debt affordability study, and that whatever these projects are need to go through the normal sunshine and the appropriation process.
Yeah. And if I understood you right, I'll go look at that study that is on the website again, but you said it's a pretty close issue related to, can the state afford these bonds?
Well, it's once again, I'm known for my numbers, and I think it's $268 million each year for 10 years.
Yeah.
But if interest rates go up, or if you don't issue the first tranche for 3 years from now, what does that do to all that? That's
Right.
why I've been a lot more comfortable with a lower number. But see, I've never been shown the project that this money was going to go for.
Is that right?
Well, you haven't either.
No, I haven't, but
I mean, I don't think. Well, if I was writing a story about this, I think I would ask that question.
Yeah.
I mean, what's
Got it.
what's the money? What's the money going for?
Yeah.
See, with the Connect NC, they came out and said we're going to do the Hanging Rock State Park, and they're going to do this community college, and we're going to build this dormitory, and we're going to build this nursing school, and all that was sort of laid out. But I'd be interested if you found an itemized list for what we're talking about here.
Right. Well, this final thing, and this shows that I just don't pay close enough attention, so forgive my naivety, but wasn't your previous boss, former governor, didn't he have a plan for this that was never approved by the legislature? But it was more like $1 billion, not $3 billion.
Yeah, I've heard of that. I've just not. I've not analyzed it, and
Okay.
But it's I just stand by what I've said earlier that
Yeah.
About the criteria, and like I said, this is I'm just trying to be the keeper of the public purse and to make sure that the things that I put on my job application when I applied for the job to be the treasurer, that I'm not and never have been one of those that puts one thing on their job application, then when they get the job in Raleigh and Washington, they go and do something different.
Yep. Yep. Thank you.
Thanks, Dave. Does anybody else have any questions this morning? No? Okay. Treasurer, would you like to make some final comments?
Thank you for joining us as we go through the week here. We've got some state health plan board meetings where the state health plan is going to be adopting these Medicare rate for the fantastic Medicare Advantage rates that we just negotiated. We have a lot of other important issues as we go into our summer that we're dealing with. We look forward to having some investment gains this year as we continue to spend $750 million every 30 days for health care, pension, and pharmaceutical benefits. And expect some bigger news as we go into the summer about other contracts that we're signing to take advantage of our largeness and to drive down health care costs in North Carolina. I'm optimistic on the healthcare side that we have enough medical providers, we have enough people in this state, and we have enough money that we should be able to come together and figure out how to increase the affordability, increase the access, and increase the quality of healthcare for our citizens. And this is not a situation where I was working at Honda Winston-Salem or Greensboro Harley-Davidson or Forsyth Garbage Service or Mayberry Dairy Bar back in Winston. Those small businesses cannot adjust or drive the cost of health care. But the state health plan is the largest purchaser of health care and pharmaceutical benefits in the state. And we're going to take advantage of our largeness, and anything that we create from driving down the price of health care and increasing the value, we're going to be sharing that. We have unique opportunities here because at the end of the day, we're the keepers of the public purse. We have 740,000 people on the health plan. We have nearly 900,000 people on the pension plan. Nearly 1 out of 10 adult North Carolinians gets a check from us in some way, shape, or form every 30 days. And we're serious about not only preserving and strengthening these plans that we have the responsibility for, but also sustaining them for the next generation of public service workers. So I appreciate your interest. None of the interns fell asleep on us, so they were, they saw me speechless for the first time, because when I had that nice, elegant, how are you doing, I was trying to find a southern, elegant way to respond back to that, so kind of flustered on that. But anyway, thank you for your interest, and of course, Frank Lester, our communications team, is always available, and we look forward to seeing you on the next month's call.